It's good to check in with you for another week.
Top of the morning to you, buddy.
Just if not anything else, just to make sure we survived.
Yeah, we woke up today. I love doing the interviews with you because I don't have to think of the questions. I just roll off of you. Every morning when I get into the office, I'm like, okay, I'm going to do a video today. It's like, you got to think, okay, what news is out there that I really need to focus in on? What's this? How do I do my thumbnail? How am I going to title it? All this stuff. I come on here. It's just, I just got to click and start talking.
Yeah, I do a Monday live and I get up and I'm literally just reading, sliding things over to the next scene. And then sometimes I make the topic and the thumbnail the night before. And, a lot of it, I just like being on the fly. Now I did one with my friend Pat on Friday.
Yeah.
And he
got a lot of hits too.
He was in Chicago. And the funny part was I'm sitting here and a guy comes and knocks on my door. He was trimming a tree behind me here. And so I literally tell Pat, hey, I got somebody at my door. Carry on without me. I got to go, answer the door. And I removed myself from the stream and I have a chart up. And what's Pat do? He goes, waiting for me to come back.
I didn't hear you. He's a good guy.
I come back and I go, Pat, you left him hanging. He goes, I got stage fright.
I did a live event last Wednesday when the Federal Reserve came out and announced what they're going to do. And I didn't have the speaker on, for that live feed to follow through. So I moved my mic over to it and I started losing everybody like, bim, 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 bim. I'm like, what's going on? So then afterwards I looked at it and you couldn't hear a thing. It was just me sitting there like this. I'm like, I get it.
No.
Oh, well.
Yeah. Yeah.
See, we messed up too.
You learn so much going live, but I wanted to show you kind of where our market is today. And because I know you're seeing it everywhere. And this is my little simple 7-day moving average, Dan. And it's, the top line is the number of new listings that are coming on over a 7-day period. And I track it every day. I miss, a day here and there, but it's the gap is getting a little larger.
Yeah.
So we're now at 71% of new listings are going under contract. And as I'm sitting here talking to you, I just saw a coyote walk right in front of my place here. It's just casual little show. So welcome to Arizona. Hide your cats. And so the gap is growing, but not because we're getting more new listings. Our listing count's going up because the sales have dropped by about 50 to 100 a week. So it's really tiny. Are you seeing that in other markets as well?
Here, what I'm seeing is weird. And somebody asked me the other day, so they were like, Dan, how much in volume are you down kind of year over year or, over the last few years, 80%, 90%, whatever. Between 2020 and 2021, it was like, wow. I mean, our numbers kind of fell off the chart. However, once rates got to 7 or 6.5 and kind of stayed there over the last year, this year we're actually closing. I mean, I'll honestly say we probably close on average, 5 to 6, maybe 7,000 a month. Back in 2020, we were doing, or 2019 or whatever, we were doing about 10 million a month. So we're not down. I basically thought the floor was going to come, undone. But like this morning already, I've gotten 5 new applicants. People are looking to get pre-qualified to buy houses. I got 2 new contracts in over the weekend. So the nice thing is we're national, because I used to just be in Illinois and Indiana and just the kind of surrounding areas. But now we're national. Basically, what I'm seeing is you guys in Arizona, you're seeing California, you're seeing Texas, you're seeing Florida. Really not a lot of people are doing anything. But now where the pickup is in areas like I just got an alert this morning, the top 10 areas where housing's still affordable. And those are Oklahoma, Alabama, Ohio, Pennsylvania. So the funny thing is, not funny, but the thing is, we're now getting business in the center of the country and east versus where we used to be west and south. So it's basically the dynamics have moved around a little bit. Like I'm from a small town in West Virginia. Follansbee, West Virginia. Look it up. I mean, it's a small rinky-dink town. Houses are stable. The affordability is good. I grew up 45 minutes from Pittsburgh. So a lot of people that work in Pittsburgh now buy in West Virginia because of property taxes. I just sold a house. A young man bought a house 2 weeks ago. We closed. And here's the wild thing. And as a realtor, you'll understand my dynamics on this. He bought the house. I think it was like for $230,000 was the contracted price. The appraisal came in at $310,000.
Wow.
He called me that morning ecstatic. He's like, is this right? And I'm like, yeah. So their realtor messed up. But what I'm getting at, there's still that, a $250,000 home in a lot of parts of the country is a really nice home. It's affordable. Real estate taxes, like on the one we just closed on last week, the young lady buying in Pennsylvania, $1,800 in real estate taxes, $230,000 purchase. Her payments basically equates out to what her rent was. Now, is that happening in Arizona and California? Not even close. But we are seeing, our business is kind of actually ticked up a little bit in the last few months. And if you were to ask me, at the beginning of the year, I'd be like, no, I'm just hoping, we're meeting payroll and everything else, but things are okay, because the middle of the country is picking up and it's still affordable, but they didn't see that, 50%, 60, 70% appreciation in 2-3 years that a lot of pieces of the puzzle, a lot of areas did.
Yeah. I think, it's always regional, we're not traveling covered wagons anymore, but it's understandable that certain parts of the country are at a complete standstill and other parts are picking up. But it's also understandable that areas like Arizona that are statistically unaffordable still have enough volume to pick up what's being offered.
Yeah.
So it's, we're sitting here at, less than 3,000 contracts on a weekly basis. And I remember in 2021, we were saying, well, we had 4,500 new listings this month or this week, and we sold 4,600. So we were always selling more than what was being offered, thus the bidding wars. So now we're sitting there going, well, we're not selling as much as what's being offered. We're off by 30%, but it's not enough for the market to have a drastic price reduction.
Yeah.
Now, if we stay at these levels of 2,500, 2,400, which I firmly believe it'll be that way all the way through the end of the year, and we're still only seeing 3,500 homes come on the market, on a 7-day period, then prices certainly have no upward pricing pressure, and they'll likely come down. But it won't be, trying to catch a falling safe. It's they're gonna come down, and how long they continue to come down depends. And like I said earlier, I think that ratio of new contracts to I know because I saw it last time, has to get down like 65%. That's when all the iBuyers investors were dumping all their homes. That's when things fell. This year, this time last year, Open Door had 1,800 homes for sale, and now they have 79.
Perfect. So that's been weeded out then, in essence.
Oh, yeah, it's all gone. But there's still investors calling me and texting me every day looking for properties.
Well, that's what I'm boots on the ground. I could be your boots on the ground. We have, in most days, I have 4 loan officers. On most days, each one of them have at least 10 consultations that people, when they go to our website, they can hit the apply now button. We don't launch them directly to the apply now tab because a lot of people have questions, or they should have questions, especially in this market. So we go through a little vetting system with them. We ask them 4 or 5 questions, and then it basically determines off those questions what person they should be speaking with, on my team. And but we're still getting every day. I kid you not. It's each one of them gets like 10 consultations a day. And there's no reason I'd lie to you. And then the other piece of this is, comments that you have on your channel on a daily basis and mine, you always ask, where do you get those numbers and so forth, is you got to just remember economics 101, just supply and demand. If you have too much of anything, and no demand, the prices are going to come down. We have right now, the supply is dismal, but so is demand. So, what you showed on your chart, it's still kind of a, with how much of a monthly supply of houses do you guys have? Is it 3 months of supply?
2.4 right now.
So in an average market, if you had 2.5 months of supply, is that a seller's market or a buyer's market?
That's statistically a buyer's market, and it varies by neighborhood, but yeah.
So that's what I'm saying. So you still have a buyer's market out there, but they're far and few between, especially in a lot of areas.
Sorry, I messed that up. 2.5 is statistically a seller's market.
Seller's market. Okay, yeah.
Okay.
So what you do there
I'm gonna
is
go get some more coffee.
Okay. So it's the dynamics behind all that. So if you have, you don't have any houses on the market, and the demand is way low as well. But you just said there's still, is it 3,000 selling a month or a week?
We're selling 2,500 a week.
So there's still demand. I guess is my point. So they're getting picked up. You don't have the supply just growing and growing. You do have supply growing, and it's that time of year too where you're going to see the supply grow, because who wants to buy or sell a house at Christmas time? Not a lot of people do, especially if you have kids. So you're going to probably see that grow a little bit. There's so many dynamics behind it. So, we were talking right before we went live, you had a person saying, the market's going to get clobbered because, there's a glut of houses coming to the market. You want to share that kind of what they were saying?
Yeah, it was that there's somewhere along the line of 16 million unoccupied homes that are about to hit the market that haven't been built yet or are being built.
So if that were fact, which I don't have any clue where they're getting that data, if that were fact, I'd want to know where they are. You're talking 16 million. That's a lot of homes. Yeah. And then I would say that market's going to get clobbered because you're not going to have that much demand to pick out that many homes. But we don't have 16 million homes on the brink of coming to the market. If we did, I'd be on here, and I'm sure you'd be on here too, saying, guys, there's a bloodbath coming.
Yeah, we don't have. I mean, I was looking at Mortgage News Daily here and was saying that, there are now 676,000 single-family homes under construction. That's, let's see, 16 million minus 676,000.
A million.
Yeah.
15 million.
That's more than two. But I'm not going to beat the guy up all day. But it's kind of like, give me a source. Because I'm interested to see that and read that. Now, I saw a headline this morning on a thumbnail that said, people are listing their houses 40% off. Or I can't remember exactly. Anyway, that was the implication. That's what was implied.
Yeah.
The real statistic is nationally between 35 and 40% of listings have had some sort of price reduction. Now, that's a big difference between saying that I dropped the price of my home 40% or 40% of us that have listings have made a price adjustment.
Right.
So it also, there's always trouble in the details.
Yeah. Where? If you're in Southern California, you're in Austin, Texas. Yeah, you're probably taking, you're negotiating price and, you listed way up here knowing I'm probably not going to get that anyways, and you come down. But if you have a house, I say this every week, and I've said it every week for the last 2 years. If you have a house, 250, let's say 300,000 or less, you can't keep them on the markets, anywhere else in the country. There's bidding wars, and I kid you not. Go out, call a realtor in, some of these areas. You'll find out that there's bidding wars. I have one right now that they put a contract in last week, and now we're supposed to find out today if the contract's going to go through because there's 3 or 4 other offers on that home. So that is the fact, folks.
Yeah, we just had a gentleman sell his condo last week. He's a subscriber to our show, and he was wondering where to price it, and he priced it to where he got 4 offers over asking price.
Yeah. So again, it's probably right in that sweet spot
out there.
Yeah. If you have a $1.3 million home in the middle of the country, it's probably not going to sell. or it might sell. There's people with money. But I was watching something over the weekend, and the guy said there's 5 Ds. I don't know if you know the 5 Ds when it comes to when you buy your first house. And I don't know
No.
all of them, but one was like diploma. There's people graduating every day, with degrees in, maybe med school, or engineers, where you get out of school and you're making, $100,000 a year because you're an engineer. We just quoted somebody out that's moving to West Virginia. I believe in West Virginia, they're getting a grant from the state. The state's giving them, I forget how much money, to move to West Virginia it was an IT job. So the state of West Virginia kicked in some money for that. So, you have that. You have divorce, where the person has to sell. And many times they're like, okay, I sold my house. I now have money. I'm going to buy another house. Because once you own your own house, it's kind of hard to go back to renting, because you don't have the freedom of that. Death, people die every day, and the estate gets it, and they're like, okay, we just want to sell the house. I forget the other D's, but you get my point. There's always, it's hard to say to everything, nobody's can buy that house. It's unaffordable. Well, there are people that can buy the homes in today's market. Not everybody. I get it. It's tough. It's really tough.
What is your opinion of the 2-1 rate buy down?
I think it's fantastic. If you can let me paint the perfect scenario for you on it. It doesn't really save you any money. It doesn't save you a nickel. Here's how it's established. So let's say today's rate is 7. So what the 2-1 buy down means, the first year, the rate's going to be 2% lower than that 7. So year 1, you're going to have a 5% interest rate. Year 2, you're going to have a 6% interest rate, because it's part of the 2-1. Okay. So you start with 7. First year, you take off 2. It leaves you 5. Then the next year you take off 1, leaves you 6. Okay. So what happens is I just have an Excel calculator that says, okay, their payments are based on a 7% rate. Year 1, you're getting a payment based on a 5% rate. Okay. So 2% lower. So the interest that you would have paid, the differentials in interest, is getting set aside on a monthly basis. So let's say the difference is $100. So what you have to do is you have to pre-fund, or you have to pay a fee to do that. So basically you're taking all the interest over the next 2 years that you would have been required to pay, and you now have to pay that up front. And it only makes sense if your buyer or your seller is going to pay that fee for you. So yes, so when you look at it as face value, you're like, okay, year 1, your payment's going to be $250 less than it would have been, but you have to front that prepaid interest. You might say, okay, all you're doing is kicking the can. Well, yeah, maybe. But what a lot of people are expecting is the Federal Reserve to reduce rates in the next 2 years. So the nice thing is they're going to do it. When they're going to do it, we don't know. But when they do it, you can refinance. So let's say, next year at this time, rates are 6.5%. So you might come back and say, okay, well, I'm going to refinance. I'm going to lock now, and it's 6.5%. So what you do is you'll pay off that old mortgage, but all the prepaid interest that you have already set aside from when you closed on the loan would get refunded back to you. So you don't lose that money. It's different than you just basically buying down the rate initially, because all that money you spent initially to buy it down permanently, the money's lost. So let's say next year when rates come down, you refinance, you don't get any benefit back. I hope I explained that in an intelligent way, but
it tees up the elephant in the room for me, which is a question that I get quite a bit that says, okay, that all sounds great, Dan, but what if house prices have taken a dip between now and the time that you want to refinance, and suddenly you may not have enough equity to refinance?
Well, you don't technically have to refinance, because let's say we lock you in at 7. So the 2-1 buy down means year 1, you're going to have a 5. Year 2, you're going to have a 6. Year 7, you're going to have 7. Or year 3, you're going to have 7. And you're locked in at 7. It would have been where you were anyways. This is just giving you a 2-year time frame to maybe take advantage of rates. And then I'll be the devil's advocate. Let's say they don't drop. Okay. But also, if you're getting an FHA or a VA loan, you can refinance and no appraisal is needed. Basically, FHA and VA states they're called streamlined refinances. So in most cases, you don't need an appraisal, and we don't need to re-verify your income. as long as your credit score is sufficient enough to fit the program and you haven't missed a mortgage payment in the last 12 months on that mortgage, FHA and VA deems it, well, they're making the payments on time. And this refinance is going to actually reduce their payment. So if they're paying now and they refinance, well, they should be able to more than qualify for it as well because the payment's lower. So there are programs that don't even require an appraisal to be done. But I get what you're saying. A lot of people are sitting on the sidelines saying, okay, if the house values go down, what am I going to do? I don't know. That's what a lot of people don't say. I always say this. I even say this to my kids. It's okay to say you don't know.
Yeah.
I don't know where home prices are going to be next year. Nobody does. And all the people that come out there and tell you this is what's going to happen, they have no idea.
They don't know. No,
we don't know. I could say, will rates ever go back down to 2.5%? Probably not. They could if we have COVID 2.0 again, and the government, everybody shuts down, the government pre-funds everything again and whatever, starts buying up mortgage-backed securities. It could happen.
Well, and we've got a link below too in the description that says get financing in all 50 states, but you can use that link to ask Dan's team any questions about those types of programs. So I encourage you to go down there and take a look. Like you said earlier, you don't have to click that link to apply. You click that link to ask questions.
Yeah, absolutely.
And so I think, there's a lot of products out there. If you're convinced that the market's going to, tank, there's nothing anybody can tell you that's going to convince you otherwise, except, there are parts of the country now where it's still affordable. Arizona, we're getting kicked in the butt right now. I get it. So, I wish my middle son's almost in a position to buy, and I've told him, hang in there. In Arizona, I said, I'm not seeing an opportunity for you yet. I don't think we're going to see a wholesale reduction in prices, but I don't have the confidence level right now in what I'm seeing in your price range where you want to live that I could get you into something comfortable.
Right. And then people are saying we're cheerleaders for real estate. You just said you told your son, maybe hold off. I'm in Chicago. We have, our prices are stable. They're stable. Believe it or not, we're only up I think we're up 4% this year. We're up maybe 4% last year. We're up maybe 4% the year before. So we didn't have that whoop, up, that we saw that huge appreciation. We never do. There's tons of homes here. There's tons of people. There's always that media, there's supply demand, economics 101. There's enough demand to gobble up the supply.
Well, now I've told my oldest son who lives in Southern California, I can't help you. You're screwed.
Yeah.
Unless he wins an Emmy. They have, he's an animator.
Okay.
And Disney contracted out to the studio he works for.
Yeah.
And he got to be the lead animator on Mickey Saves Christmas last year.
Oh,
and now October 1st, they're coming out with Mickey's Halloween special.
Yeah.
And
he's the head animator,
and he's the lead animator.
That's fantastic.
His director said, this one might get, some attention. It's really good. It's fascinating. The figures are about this tall. Like he showed me Mickey Mouse, actually about the tall of this water bottle, which is pretty big considering what he usually works with, things about this tall. But he was telling me he works on this table and doing the Halloween special. He said, there's been things I have to, you're moving an arm, moving a leg, moving a mouth, click, right? He says, I've had to crawl underneath this table and get up and stretch and put my arm and make a move and go back and click. I said, oh, you got more patience than me, son. So we're having a big watch party on October 7th, the Saturday. We're all going to watch the Mickey Halloween.
I'll make sure to watch it. Fantastic.
Yeah, I'll let you know when that's on, but cool. Little diversion there. But let's, I don't see there. Gosh, there's some economic news that everybody's waiting for the CPI in October, right? That's going to be the biggie. That
the PCE's coming out
about where we're headed, or
the PCE's coming out this week is tons of data. We have the GDP coming out, which is gross domestic production, how productive our economy is. We have the PCE, personal consumption expenditure. That's the one thing that the Federal Reserve really puts most of their credence in when it comes to inflation. That's coming out on I think it's Friday. All week we have stuff coming in. I just posted a video probably about an hour ago with, I do a video every morning, just going over the economics of, economics, and especially how it's related to housing. And this week is full of data. We had the market for some reason. The interest rates were spiking this morning, and I'm like, what's causing this? And I go in, and there's really no economic news out. The Dow Jones was flat, the Nasdaq was flat. So you got bond trading all over the map, and there's we're just in unprecedented times right now. And, I try to, and you try to come out on a daily basis giving our guidance, but guys, we still don't know factually. Can I say, next year housing prices are going to be up 10%? No. And if somebody does, they're completely lying to you because they have no idea what's going on. We try to do is just extrapolate the data coming out right now and saying, what should this, based on history, how should this, affect the markets? But when's the last time we went through COVID in history? Never.
Where are we expecting GDP to come in?
Well, it's all over the map. So I think the readings, I can actually pull it up. I might be able to pull that up on my screen because I had it up recently. So if you go to the economic calendar, I don't have the economic calendar up. Let me pull it up real quick because it is coming out this week, and they're predicting. Let's see what we got. Clear it. U.S. data. I know you guys can't see my end, but bear with me 1 second. I'll give you that data. GDP is expecting to come in at 2.2.
So that rules out a recession for last quarter.
Yeah. Well, a lot of analysts are coming in. They had GDP coming in at like a 5 not too long ago. Now it's revised down to, then it was revised to 3, then the 2. And that's also what the Federal Reserve looks at, because they're saying, real rates right now are enough to satisfy the inflation numbers. I won't go into how you figure real rates and all this other stuff, because you take what bond yields are plus profit margins minus inflation levels and all this other stuff. But even the Federal Reserve chairman came out and said real rates are high right now. And they're in a sufficient area. So then you think it's like, well, wait a second. The news is even telling us that the Federal Reserve is going to raise rates again, this year. But if you go to the tracking of it, the dot plots and the other things that I analyze, there's nothing in the cards right now that said the Federal Reserve or the Fed's going to raise rates again this year. But mainstream media has it that Fed's going to raise rates again at least one more time. And it's like, so the mainstream media is doing a lot to help the Federal Reserve with this stuff. They're scaring the bejesus out of everybody in the markets. Like I went to the Chicago Fire game over the weekend, and I was talking to a bartender. We went to a restaurant bar, and I was telling him, basically we were talking about real estate, and they're like, there can't be anybody buying houses right now. And I'm like, you'd be surprised. Yeah. Then yesterday I was at an apple picking thing, and I ran into friends of ours, and the guy's an engineer, and he's like, we started talking about housing because his daughter was kind of contemplating buying a house. And he's like, there can't be anybody buying right now. It's the mainstream media. It's, again, where you live also. Fallsby, West Virginia. Would I buy a house there right now? You betcha, because house prices are stable, taxes are cheap, and it's 45 minutes from Pittsburgh.
Well, Dan, I look forward to checking back in with you next week to see what kind of volatility we had this week. Yep. And just we'll check in every Monday and see what portends. And other than that, have a great start to the week, my friend.
You too, buddy. Take care. It's an action-packed week when it comes to the economic calendar. So I'll see you soon.
All right. Thanks, pal.
All right, man. Take care. Bye-bye.